Thank you, Chairman. I think obviously in light of what happened in America 2 weeks ago, the American people have spoke loudly. They have spoken clearly. They want a major shift in policy here in Washington, D.C., and they have asked for President Trump to come back to Washington and clean up the mess of the last 4 years. I'm not going to deliberate that much further. I could talk about that in many other places at many different times. Quickly, for all the witnesses, there are a host of pending rulemakings at your agencies, including FDIC corporate governance proposal, the FDIC broker deposits proposal, and the joint agency Basel capital proposal. Will each of you commit to pausing pending rulemaking and new policy releases until the incoming administration takes office and can make new appointments to positions that are or become vacant?
Congressman, as I said earlier, we have 3 major interagency rulemakings on capital, liquidity, and long-term debt, and I look forward to working with my new colleagues at the OCC and the FDIC on those rulemakings next year.
Congressman, as I indicated earlier, we have a number of pending rulemakings. We don't anticipate any of them will be ready for action prior to the end of the current administration.
As I noted earlier, we have to finalize the agency's biannual budget. We must also adopt an annual performance plan. We're on track to do those. We also have 1 rule under consideration and deliberation amongst all 3 board offices on succession planning, hoping to find consensus there if at all possible.
Similar to Vice Chair Barr, we don't intend to move forward on capital, liquidity, or long-term debt.
Okay, so as a follow-up, you all intend to just hold tight until the next administration is here, correct?
As indicated, we all have other rulemakings that are in train that are kind of normal business, like data collection that are a requirement. We have a process we're doing together to combat elder fraud. So those kinds of things I think will proceed, but on the major rulemakings that people are focused on, as I said, I plan to wait until my colleagues join with me next year.
And without wasting time, I'm assuming everybody else, by nodding their heads, is in agreement with that. Good to know. Chair Harper,
yes.
This past September, the CFPB issued a circular that created new expectations for how financial institutions must record and retain customers' opt-ins to overdrafts resulting from point-of-sale debit card and ATM transactions. I'm a little concerned that the CFPB has once again tried to change existing law without going through notice and comment rulemaking under the Administrative Procedures Act, and that their policy change will ultimately hurt consumers. Do you intend to direct your examiners to apply the new expectations described in the circular?
So the CFPB sets the rules for all 4 of our agencies, for the institutions under which we have consumer financial protection supervision. We'll be taking a look at that and providing appropriate guidance to our examiners.
Okay, all right. Vice Chair Barr, according to the Federal Reserve Board's latest supervision and regulation report, over 99% of banks were well capitalized, and the 2024 stress test revealed that large banks are well positioned to weather severe recession. They were tested against and stay above minimum capital requirements. On September 10th, you outlined changes that you would recommend in Basel III Endgame in a reproposed rule, which you said would result in a 9% increase in capital requirements for certain banking organizations. The proposal that was issued for comment in July of 2023 would have raised capital requirements for large banks by an estimated 19%, and an increase that you defended numerous times before in this committee. Why should members of this committee have any confidence that a 9% increase in capital is warranted or appropriate?
Thank you, Congressman. We took very much the comments that this committee and the public and the banking sector and other members of the public gave us. We took those comments into account, the 3 agencies working together to come up with the reproposal that I described in that speech. And I think it appropriately balances the costs and benefits of the rulemaking. I look forward with my new colleagues at the OCC and the FDIC to get their input on that, to get their understanding of it, and to move that process forward. I do think it's important to finalize the Basel process to raise capital standards to a level playing field across the international system, and to take into account the risks that we saw from the global financial crisis that were not yet fully incorporated into our minimum requirements, as well as to reflect the lessons learned from March 2023 with respect to interest rate risk by being sure that unrealized losses on the balance sheet of banks are taken into account in capital.
But Vice Chair Barr, I'm out of time. Only thing I will say is that let's all be honest with ourselves. What happened in Silicon Valley Bank is not an issue of bank capital. That's an issue of the fact that they were not paying attention and the SF Fed was not paying attention. With that, I yield.
Gentleman yields. Gentleman from Massachusetts, Mr.